let's not forget that just 3 short months ago, Airbnb's survival was put into question during the beginning of the pandemic. Now, Airbnb is going public, and suddenly everyone has forgotten about the challenges they were facing. In this video, I'm going to be going over Airbnb, concerns with Airbnb going public, exactly how much Airbnb has already raised in the year 2020, why you may want to reconsider buying Airbnb as soon as it hits the markets on day one, and we're also going to be comparing other companies and how they have performed since going public initially. Companies like Uber, Lyft, and Twitter. A few months ago, CEO of Airbnb, Brian Chesky, told employees that revenue this year was forecasted to be less than half of what the company earned in 2019. In August of 2020, it was stated on Airbnb's website that they confidently submitted a draft registration statement on Form S-1 to the Securities and Exchange Commission. August 19th is a specific day of when the drafts were documented. Let's go ahead and run down through some facts when it comes to Airbnb. The company was founded in 2008. Airbnb has 5,600 employees, and 1,900 employees were laid off in the month of May. Airbnb's current valuation is at $18 billion. That is down from March of 2017 when the company was valued at $31 billion. That is a 42% decline since 2017. Airbnb has listings in 200 countries, 100,000 cities, and there are 7 million listings worldwide. Let's go ahead and take a look how Airbnb has performed so far in 2020. In Q1, Airbnb's revenue was $842 million with an adjusted loss of $341 million. Airbnb's revenue in Q2 was $335 million with an adjusted loss of $400 million. Investors of Airbnb include venture capital, institutional investors, private equity, individuals such as Ashton Kutcher. Airbnb raised $1 billion in the month of April 2020, and then another $1 billion just 1 week later. It is reported that the $2 billion was raised with a mix of debt and equity. It's also reported that Airbnb is paying interest on this $2 billion anywhere from 9% to 11.5%. When it comes to competition with Airbnb, there's really no close second place. When you look at traffic in the month of January, you can see just how much Airbnb is ahead of all the other competitors. In January of 2020, Airbnb saw 50.2 million visits. VRBO saw 14.7 million visits, HomeAway 3.9 million visits, and Turnkey had just 91,000. So early on in the pandemic, local governments deemed Airbnb as a non-essential business. When Airbnb was faced with many hardships in the beginning of the pandemic, many people did not believe they would ever go public in 2020. Airbnb got creative during the pandemic and offered online experiences that included coffee masterclasses, magic shows, fitness workouts, and more. Airbnb has also reported a lot of growth in rural areas with fewer than 100 inhabitants per kilometer. In the month of June, host revenue jumped 25% in rural areas. In my opinion, Airbnb will be the favorable choice for travelers moving forward during the pandemic and post-pandemic. Airbnb provides an environment that's a lot safer for most people when you compare it to hotel situations. Also, people are just tired of being cooped up at home in small spaces. They rather choose an Airbnb listing over a hotel when they could have amenities like a pool to themselves or an entire backyard or patio. So Airbnb started with home listings, they expanded to experiences, and this is one thing that many people are not speaking of, but I think it could be a huge revenue point for Airbnb, and it's adding basically office listings. So for example, I'm someone who creates YouTube videos at home, And my home is not really the best scenario because I have construction over here, I have a daycare over there, I got barking dogs back there. So if I could log into Airbnb, search for offices near me, and search for quiet places or places with really strong Wi-Fi, I think that's the next big thing, especially because many people are working remotely. And sure, it's okay to work at your home for a period of time, but sometimes we just need a change of scenery. So I think this could be a next big move for Airbnb. Some critique Airbnb for driving up rental prices in areas and contributing to housing shortages in major cities. Just to give you an example, I live in the city of San Juan, Puerto Rico, and there's many Airbnbs here. If you try to find, let's see, a 1 or 2 bedroom place on somewhere like Classificados, which is like our Craigslist here, or Marketplace, you find places that really aren't updated, they're pretty run down, it's hard to find a good place. And when you go on Airbnb, you find the nice places, right? So people, they fix up their places for Airbnb. They don't really fix up their places for renters, for long-term rentals. And also on the other hand, there's a component of the price of rent has skyrocketed here in Puerto Rico over the past few years. It was originally blamed because of FEMA workers coming in after Hurricane Maria and them taking over a lot of short-term rentals. But what people quickly learned is those prices skyrocketed and stayed there, and that was mainly because of Airbnb. Airbnb has also been accused for racial discrimination, illegal listings, and deadly house parties. But we have to understand that when you have a business at such scale, there are going to be fatalities along the way. Whether you're a car company, you're renting out homes, no matter what, if you have a very large scale business, unfortunately, some form of death is going to come into the mix, whether it's directly the company's fault or not. Airbnb hosts became very frustrated during the pandemic when Airbnb decided to let people cancel for free. This created additional expenses for the hosts. CEO of Airbnb, Brian Chesky, actually apologized to hosts for his mistake, saying that he should have treated them like partners and that he made a mistake when he did that. Airbnb did launch a $250 million relief fund for hosts. So when we think about Airbnb going public, am I going to be rushing on day one to buy the first stocks that are available? Probably not, because when you look at recent companies that have gone public, there's a very common thing. See, companies used to go public when they needed money, when they were first starting out. Now companies go public once they are well established, have high revenue, but don't necessarily need the money. There was a lot of high hope with recent companies that went public, like Twitter, Uber, and Lyft, but how have those performed over time? Uber, for example, went public in May of 2019. So on May 10th, Uber went public, and Uber was down at 70% at one point. And now Uber is currently down 30% from the day they opened. Lyft went public on March 29th of 2019. Lyft was down 84% at one point, and now they are down 65% from opening day. Twitter went public on November 7th, 2013, so 6 years before Uber and Lyft. So that gives you some more context for a company that didn't go public as recently. And Twitter was down 81% at one point, and now Twitter is down 48% from opening day. Just gathering these numbers and taking the pandemic into consideration, I will not be running after Airbnb. There seems to always be a correction right after the company goes public, because what happens is it's the smart money selling. Always keep in mind, if you're buying, who are you buying from? So here are the concerns when it comes to Airbnb going public. There's reports that top executives have options in the company that are going to expire. These stock options are set to expire sometime in the fall. There could be a wave of employees and top executives at Airbnb that sell their stocks as soon as it hits the public markets. Think about it like this. If you're in their shoes and you see companies like Uber and Lyft who went public, you would look at those charts and be like, I'm best off selling on day one. An IPO can simply just be liquidity for smart money. Think about it as the people that know the most about the company, that have been with the company the longest, they're the ones that are going to be selling their stocks during that initial period of time when Airbnb goes public. So think about it like this. When you buy during the very beginning, when Airbnb goes public, who are you buying from? You're buying from venture capitalists, equity funds, and friends and family who invested early in the business. All I'm saying is that think about this. If you're buying, who are you buying from? When you look at big money makers, when you're trying to 10x your money, it might be much more difficult if you're trying to buy in with Airbnb initially right off the bat as soon as they go public. Just remember that opening day is likely to be highly volatile. Let's run over some numbers from previous opening days from other companies in the recent years. On day one, when Lyft went public, the low of the day was 78 and the high of the day, 88. Uber on day one, the low of the day, 41, high of the day, 45. When Square went public, the low of the initial day was $9 and the high, 15. This is never financial advice, but I personally am going to sit back, relax, and watch Airbnb and see what it does over time. As I take into consideration companies that have recently gone public and how volatile they were, and how day one, day two are probably not the days to buy, I just rather sit back, relax, observe what's happening, and also take into consideration the timing, right? It's gonna be either during the pandemic or right after the pandemic, which could create even more volatility in the markets. At this point, we do not know what each share price of Airbnb will be. We don't know what the market cap will be or how many shares will be available. We don't know the exact valuation of what the company will start out at, which is very important information. So let me just give you an example. My friend reached out to me and she has an account with MicroVenture. And so I believe you have to be an accredited investor, and basically there was all of these different fees if you wanted to basically get into a pre-IPO investment. So I'm going to be reading over the investment terms and I'll be letting you know exactly what my initial thoughts were. So the minimum investment in this scenario, this is pre-IPO, $25,000. There's a placement fee of 6% of capital contribution paid upon closing. There's a management fee of 0.5% of invested amount annually. There's a carried interest, 15% of profit after initial capital contribution is returned. And there's also an offering cost, 1.5% of capital contribution paid upon closing. And this particular website is stating that it's $120.19 per share. And when I particularly read all those fees when it came to the pre-IPO, I said, absolutely not. I'm out. It kind of felt like a moment where I was Barbara Corcoran or Lori Greiner on Shark Tank.
But I do feel that this is going to be a tough journey. I just don't feel it's investable for me today, and I'm sorry, but I'm out.
And I was like, no thank you. All those fees, absolutely not. So that's all I have for you today. As always, go out there and create a portfolio that you love. Make sure to check out the link below. It is your last chance to get 2 free stocks on Webull. Don't forget to pick up some free crypto on Coinbase. And when I hit 500 subscribers, I'll be giving away a second free Ledger Nano S. That's all I have for you today. As always, go out there and create a portfolio that you love.